Ladies and gentlemen, good day and welcome to Brigade Enterprises Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. M.R. Jaishankar, Chairman of the company. Thank you, and over to you.
Good afternoon, everyone. Welcome to the Brigade Enterprises Q4 Financial Year 23 earnings call. I am joined by our Managing Director, Ms. Pavitra Shankar, and Joint Managing Director, Ms. Nirupa Shankar, our Executive Directors, Mr. Amar Mysore, Mr. Roshan Matthew, the Senior Management Team, Mr. Atul Goel, CFO, Mr. Om Prakash, Company Secretary, Mr. Pradyumna Krishna Kumar, Chief Business Development Officer, and Mr. Vishwa Pratap, Chief Sales Officer, Residential. I am happy to report, and their teams of course. I am happy to report that Brigade has achieved its highest sales figure to date for both the quarter and the year. This remarkable accomplishment can be attributed to the outstanding performance of all our business verticals, each contributing significantly to our record-breaking numbers. Looking ahead, we anticipate maintaining and building upon this momentum across all lines of business. We have a promising pipeline of new residential projects, a thriving leasing business, and projected growth in our hospitality sector throughout the next financial year. As a validation of our consistent performance, I am happy to say our credit rating has also been upgraded by ICRA from A+ positive to AA- stable. Coming to individual SBUs or sectors, residential, I'll talk about residential now. In financial year 23, Brigade achieved an all-time high with new sales in the real estate segment of 6.3 million square feet and value of 4,109 crores. Of this, residential sales accounted for 6.075 million square feet, amounting to a value of rupees 3,908 crores. The balance is by strata sale of commercial office space. This reflects a significant growth of 31% in terms of area and 32% in value compared to the previous financial year. Furthermore, our total collections reached rupees 3,721 crores, a 21% rise from the previous year. During financial year 23, we forayed into plotted development segment and launched 3 new plotted projects, almost completely selling out on launch and accounting for about 1 million square feet from this segment alone. Q4 FY23 has emerged as our best performing quarter in the residential business with new sales of 2.33 million square feet valued at rupees 1,463 crores. This was complemented by strong collections of rupees 984 crores in the same quarter. These achievements were supported by launches of new projects, namely Brigade Calista, Brigade Valencia, Brigade Oak Tree Place, the residences at Brigade Tech Gardens, Brigade Oasis Phase 2, and the Luminaire block at Brigade El Dorado. Mid-segment and upper mid-segment housing continues to see the highest demand, with customers preferring larger units despite increasing prices even during the launch phase. Despite higher interest rates, there has not been any pullback in the demand for home loans. Additionally, we were able to successfully sell out some of the projects launched earlier. The residential sector has a strong outlook due to stable demand in our target market, with a sales revenue of CAGR 36% over the past 5 years and setting new records each year. We have a robust pipeline of upcoming projects. An additional 7.55 million square feet will be added to our portfolio over the next 4 quarters. We are actively pursuing and acquiring lands in our markets of Bangalore, Chennai, Hyderabad, and Mysore. Coming to office SBU, the office segment market had a relatively good year despite a turbulent macroeconomic environment across the globe. There were concerns of a recession in Europe and the United States, and this has led to delayed decision making for large office space requirements. Office parks have seen an improved occupancy ranging from 45 to 65%. Asia is the bright spark with the highest return to office levels of workforce. Brigade's office vertical saw a 43% increase in revenue from 450 crores in FY22 to rupees 654 crores in FY23 and saw a 108% increase in the leased area from 0.6 million square feet in FY22 to 1.25 million square feet in FY23. As regards the retail sector, the retail industry had a blockbuster year due to an increase in discretionary income and consumer sentiment. Customers prefer to shop in-store across various categories, including restaurants, movie theaters, and family entertainment centers. With rising urban population and per capita income, India's organized retail market will continue to show robust growth. Brigade's retail rental income was rupees 156 crores, a growth of 60% in FY23 over the past fiscal year. Footfall increased by 106% over the past fiscal year for the mall SBU, and the weighted average rentals of our large destination malls increased by 13% over FY22. Coming to hospitality SBU, our hotel portfolio showed an impressive revival in occupancies, ARRs, and F&B revenue, banquet events, both social and corporate, leisure, and group travel. Portfolio occupancy reached 69% as against 62% of pre-COVID occupancy. ARRs in FY23 touched 110% of pre-COVID levels and 67% over FY22. This positive trend was supported by the restart of international flights, an uptick in corporate movement, and the scheduling of mega events. Revenue grew rupees 179 crores in FY22 to 394 crores in FY23, an increase of 120%. The MICE, which stands for Meetings, Incentives, Conferences and Events MICE segment, is likely to see increased bookings from G20 delegates, as many of these events are held in hotels and conference centers. Overall, indications are strong that the hospitality business will continue its growth path in the coming year as well. That brings me to end of our operational highlights. Thank you for listening. I now request Atul Goyal, our CFO, to take you through the financial highlights. Thank you.
Thank you, sir, and good afternoon. On behalf of the company, we welcome you to the earnings call for Q4 FY 2023. Chairman has already shared operation highlights. I'll be sharing key financial highlights for the quarter and the FY23. All verticals of the company, as told by Chairman, has done very well in Q4 as well as in the full year for FY23. To start with company's update for Q4 FY23, the real estate segment clocked a turnover of rupees 573 crores with an EBITDA of 12% in Q4 FY23, whereas the same for Q4 FY22 stood at 729 crores. The leasing segment clocked a turnover of 188 crores with EBITDA of 71% in Q4 FY23, whereas the same for Q4 FY22 stood at 181 crores. The hospitality segment clocked a turnover of 112 crores, an increase of 102% from the same quarter last financial year, with an EBITDA of 35% in Q4 FY23. The consolidated revenue for Q4 FY22 FY23 stood at 872 crores as against rupees 965 crores in Q4 FY22 with an EBITDA of 232 crores. EBITDA margin stood at 27%. Consolidated PAT after MI for Q4 FY23 is 69 crores. We saw a significant jump in total collection in Q4 FY23, which is totaled up to 1463 crores as compared to 1328 crores in the previous quarter, 10%. There was an increase in cash flow from operating activities by 24% from last quarter and stood at 436 crores during Q4 FY23. Coming to group's performance in for full year FY 2023, we have achieved the highest ever collections for FY23, which stood at 5,424 crores, an increase of 33% from previous year. The revenue for FY23 stood at 3,563 crores versus 3,066 crores in the previous year, an increase of 16%. The real estate segment clocked a turnover of 2,418 crores with an EBITDA of 13% in FY23, whereas the same for FY22 stood at 2,290 crores. The leasing segment clocked a turnover of 752 crores, an increase of 26% from the previous year, 71% in FY23. The hospitality segment clocked a turnover of 394 crores, an increase in 120% from the previous year with an EBITDA of 30% in FY23. The consolidated EBITDA for FY23 stood at 978 crores, an increase of 17% from previous year. EBITDA margin stood at 27%. Consolidated PAT after minority interest for FY22 is 291 crores. Coming to the debt and liquidity position, we continue to have adequate liquidity and undrawn credit lines from the financial institutions. Our average cost of debt has been contained at 8.67%, which is an increase of only 102 bips, though repo rate has grown to 250 bips, has increased by 250 bips. So debt management has been good. Gross debt as of the entity stood at 3,830 crores. The cash and cash equivalent was 1,690 crores as on 31st March 23. Consequently, the company's net debt outstanding as on 31st March 23 is 2,139 crores, out of which BL share is 1,474 crores. Our real estate debt reduced by 83% during FY22 from previous year and stood at 46 crores as on March 23. We have a zero residential debt in BL standalone today because of the higher sales and collections, and almost 76% of the debt pertains to the commercial portion, which is backed by rental income. Debt equity ratio stood at 0.55 as on March 23 at consolidated level. I now hand over the mic back to the moderator for questions. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Adidev Chattopadhyay from ICICI Securities. Please go ahead.
Good afternoon. Thank you for the opportunity. Just a couple of questions. Considering our business development pipeline and whatever planned launches for the coming year, would you like to share some guidance on the residential sales booking front for the next year? That is the first question. Second is on the office leasing, by when are we targeting to see a full lease up of the vacant space which we have? Thank you.
Good afternoon, Adidev. On the launch pipeline, we have already indicated around 7.5 million square feet to be launched on the residential side. That GDV should translate to around 6,000 crores at the top line. Of that, Brigade share would be around 5,200 crores. The bulk of this should come between Q3 and Q4, pretty similar to what we saw in FY23. And also, about 25% of it will come from our residences at Brigade Icon, which is a CBS Mount Road property that we acquired. So there is some, there is some dependency on that launch to happen to reach those kind of GDV numbers. On the leasing side, we have around 1.9 million square feet to be launched across 3 projects in Bangalore itself. I'll let Nirupa answer the leasing question.
Hi, Adidev. The good news is that with all our non-SEZ projects, all those have been leased 100%. As you know, SEZ properties have been taking a little longer time than expected. If you look, 87% of the office space leased was non-SEZ projects. So for us, all our non-SEZ projects are 100% leased. The 3 SEZ projects that we have, Brigade Tech Gardens, World Trade Center Chennai, and GIFT City. Even GIFT City was actually fully leased, but due to some lack of approvals for some clients, some space came back. But the thing is, the good news is that all our existing tenants are looking to expand their existing office spaces. So we are hopeful that, over the next 2 quarters, next 2 to 3 quarters, I would say the target is to complete this leasing. There is some, the way in which transactions are happening are changing. People are trying to reduce how much space they take up, and there's rationalization of the space take up. But generally, we're happy to note that our existing clients are the ones who are looking to expand in our current office spaces.
So to understand it correctly, to get over the issues in the SEZ space, you're saying the existing SEZ clients are looking to expand. Is that understanding correct? Hello?
Yeah, sorry, it was on mute.
Yeah.
Yeah, so what we've been able to do is, because of the quality of our projects, even clients who were not looking at SEZ areas, we're able to bring them to our space and figure out a way to convert them into using SEZ areas, along with the fact that our existing tenants are looking to expand. So we're not just saying, hey, our existing tenants will expand and leave it at that. We are definitely working towards converting even non-SEZ clients into using SEZ areas. So we're just sort of educating them on how, with the right paperwork, this can happen. So there is traction. It's just going slower than what we would like it to be.
Okay. And just to come back to the first question, so with the launch pipeline, so are we again targeting a 15-20% growth in the sales number for 24? Any number you like to specifically share on the residential side, that is?
Guidance. As you know, we have never done guidance. Last year, I would say we showed a 36% increase on 22 numbers. I'm not promising the same. I think what we always do is to show a CAGR, a 5-year CAGR of around 20%. So I think we'll try to do something along those lines. As I said again, it's heavily dependent on the launches coming in. We have no issue with the launches actually happening. It's just about timeline and planning it and getting the approvals, which may not always be time bound to the way we need them to be.
Okay. And just one last housekeeping question. How much of the sales in Resi for this quarter were from the new launches in Q4 out of the overall sales?
Yeah, in Q4, 60% was from the launches. That was anyway expected. We were communicating that all along. But across for FY24, it was only, for FY23 full year, it was only 40% of the total sales done.
Oh, okay, so about 50%, right, for this quarter, you said? Did I get the correct number?
50.
50. Okay.
For the quarter.
6. Okay, yeah, thank you very much. I'll come back in the future. Thanks. All the best.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants, please restrict yourself to 2 questions. The next question comes from the line of Karan Khanna from Ambit Capital. Please go ahead.
Hi, thanks for the opportunity and congratulations on another great year. So Pavitra, you spoke about 20% CAGR is what you're targeting over a 5-year block. Now, over the last 5 years, from 3 million square feet, working close to 6.3 million square feet, that implies a 20% CAGR. But going forward, how should one think about this number? Because if I look at the launch pipeline also on a rolling 4-quarter basis, so this stood at 12.5 million square feet at the end of second quarter. Now it's close to 7.3 million square feet. So if you can briefly talk about the capabilities that you're building to continue the 20% CAGR over the next 5 years, and second, how should one think about the execution over the next 5 years, considering that the pricing environment could also be slow compared to what we've seen in the last 5 years?
Yeah. Hi, Kanan. Obviously, as you pointed out, our business has doubled over the last few years. I think we are keeping in mind that the base itself has increased substantially. So promising that would also double in the next few years is not something that we're trying to communicate here. We have also been investing and resources in expanding Chennai as our second market. And I'm happy to say that the growth in terms of business development and the projects coming into the pipeline will also be evident in terms of Chennai contribution in Q4 and in FY25 onwards. So I would say that, in the next couple of years, we would be trying to done in FY23. We would not probably be estimating numbers or growth as we have shown in FY23 over the previous year. I hope that answers the question.
Sure. My second question on the hospitality business, for the record quarter that hotels have seen this year, you were able to generate around 30% EBITDA margin. Whereas when we look at some of the other domestic players, asset-heavy players, for their own portfolio, especially in India, they've been able to do margins in the range of 40 to 55%. So if you can talk about areas where you think that Brigade can also see an improvement in the hospitality segment, and going forward, is it only the pricing that will drive the margin improvement for the hospitality business?
Generally, our hotels have been performing well in terms of and the occupancy. There are only 2 hotels in relatively soft markets, the Grand Mercure in Gujarat in GIFT City and the 4 Points by Sheraton Kochi. Apart from those 2 hotels, all our properties are doing very well, and we expect that the efficiencies will improve going forward.
Sure. And lastly, on Brigade Square, Trivandrum, what's the targeted lease rental and the completion date for this project?
So it's just started construction, so it will take at least a couple of years more to come into the market. We're expecting to be around 55 rupees on average.
All right. That's it from my side. Thank you and all the best.
Thank you.
Thank you. Next question comes from the line of Murtuza Arsiwala from Kotak Securities. Please go ahead.
Yeah. Hi. Thank you. Just a couple of questions from me. One is, while backward looking, if we look at the residential P&L, the margins have sort of been weak for almost all of FY23 compared to the preceding years. Any specific reason for it, and how should we think of margins going forward? Second is, the fourth quarter on the leasing business, there seemed to be a sequential drop in both revenue and EBITDA. Any specific reason for that? And we saw large payments for land, investment in land purchases, etc. Any details that you would like to share on the same?
Yeah. Hi, Atul here. See, the margin is always dependent in real estate is how much revenue you are recognizing. And as per AS 115, you can recognize the revenue only when your registration gets done. So all your expenses get loaded on the same revenue, and that's why there is some margin difference. And secondly, I would also like to say that we were having affordable housing which we were closing, and because of that, their margins were less, and those all revenue has been recognized during the year. So next year, definitely you will see very good margin in real estate business. Lease rental, yeah, there has been a drop of around 8 to 10 crores, but that is mainly because some of the CAM charges and all, there was a delay. So now that is getting sorted out. We have already acquired a new company called Tandem. So we are increasing our overall revenue. So that will also get sorted out by next quarter. So you will not have that quarter on quarter so much variation as it is showing this time.
Sure. And on the land purchase?
Land purchase, yes. You want to know how much total money we have spent on land purchase?
No, that's given in the presentation, but any more details on which land this payment is made towards? Yeah.
So
in Q4, we concluded the
Chennai.
previous Motor and Mount Road, so that's the increase in the land payments that you've seen specifically in Q4.
Okay.
there are some other properties, JDAs, which we have done in Chennai, as well as some purchases in Bangalore. All those are included in the new land purchases which is there.
Sure. Thank you so much, sir.
Yeah, thank you.
Thank you. Next question comes from the line of Biplab Debbarma from Antique Stock Broking. Please go ahead.
Thank you for taking my questions. My first question is on FY23 and the sales that has come. What is the split between Bangalore, Chennai, and Hyderabad?
Sorry, your voice is not clear.
So, what is the split of sales in FY23 from Bangalore, Chennai, and Hyderabad?
Yeah. So in the last financial year, we had 82% of it come from Bangalore, and the rest of it come from Mysore, Chennai, and Hyderabad. 10% of it came from Chennai, and we also had a plotted development project launch in Mysore, which accounted for around 4% of the total.
Okay. My second question is currently in Bangalore, what are the micro markets, neighborhoods where you have lesser presence, and shall we expect Brigade to increase its footprint in these micro markets in coming years?
Sorry, I couldn't hear in which market we have less presence.
In Bangalore, for micro markets or neighborhoods that you have lesser presence, and do we expect to increase our footprint in these micro markets going forward?
So I wouldn't say we have lesser presence in any specific micro market. The markets that perform well in Bangalore are east, southeast, north, and depending on the types of product, even south and west do well. So I think Bangalore overall is a very healthy residential market with good performance in all the micro markets. We have seen our portfolio also, a lot of the launches came in Bangalore East and North over the course of the last financial year, and all were taken up pretty well. So even in the coming launch pipeline, it continues to be the same. We have a lot of launches coming up in East and North Bangalore. And if I can draw note, also last year in FY23, we had 2 projects launch in South Bangalore, Brigade Komarla Heights and Nanda Heights. They did extremely well and are contributing especially to the higher realization of our portfolio. So I wouldn't say that we don't have presence in certain micro markets, and depending on the micro market, we have adjusted the product and pricing strategy as well. So I'm very confident of our Bangalore execution.
Thank you. That's all.
Thank you. Next question comes from the line of Rakesh Wadhwani from Monarch AIF. Please go ahead.
Hi team. Thank you for the opportunity, and congratulations on the great set of numbers in Q4 and the full year. I have a question. There's a new article that is circulating that the government of Karnataka may increase the circle rate by 20-30%. Just want to understand what are the impact you can see. And one more thing, whatever deals we have done in the past, are they above that minimum recurring rate? That's it.
Yeah, this is Jayashankar. So I don't think there will be any negative impact on government increasing the minimum circle rates or guideline value, what we call in Bangalore, because all our selling prices or property acquisition rates are above the circle rate. So that way it will have zero impact in my opinion. That is the case for most projects and for most developers. I can say that.
Okay, sir. Thank you. Thank you very much.
So the impact will be zero.
Thanks.
Thank you. Next question comes from the line of Pritesh Seth from Motilal Oswal Financial Services Limited. Please go ahead.
Hi. Thanks for taking my question, and congrats on great year. My first question is on business development. While Chairman sir highlighted about actively pursuing land, I just wanted to understand the strategy on business development. So, are we looking at some kind of churn rate that if we sell X million square feet in a particular year, we would look to add X plus or X point something into our pipeline regularly, or is there some value target that we have in mind when we strategize on the new project additions? So your comments would be helpful on that. And I think in particular this quarter, it seems there is some bit of or some project addition that has happened. So if you can elaborate on that as well, that which micro market we added a project in this quarter. So 2 questions on business development.
Yeah. So land bank, our strategy is to acquire, develop land, within a 3 to 5 year time frame. So we are not in the land banking strategy where we might acquire, land in areas which are yet to see sort of positive growth development. How we approach it is basically we look at each of our businesses, we look at how much we want to grow those businesses, in which micro markets we feel there would be the best traction, micro markets and markets in general, which is why we've been communicating about Chennai being a strong market for us and one where we would be putting a lot of focus. We're also focused only on Bangalore, Chennai, Hyderabad, and a couple of smaller markets where we've had presence in the past. And we feel presence in these 3 markets is more than sufficient for us to meet the kind of growth objectives that we as an organization have, for at least for the medium term. So we're not looking to expand into other geographies as we have been asked about before. In terms of exact value, I would say that's like a moving target based on, each year what has been added to the land bank, what might be launching in terms of pipeline. So based on that, we have to work within the land bank and see what can be added. And also I'd like to say whenever there is good quality land, regardless of which micro market or which, product or area it might be in, we would be looking to acquire that land, because I think the scarcity of good title and good lands is more important than maybe specifically trying to slot it into a line of business or a type of product or a micro market also. So in terms of addition to the land bank, we have, while I'm not going to disclose the exact locations, a lot of it is in North Bangalore, in North Bangalore and also in Chennai, across both commercial and residential.
This is for this quarter, is it?
Yeah, this is only for this quarter.
Okay, fair enough. I mean, the reason for asking that question was in between we had a lot of traction on project addition, considering that we were short of kind of pipeline and we added multiple projects. But last 2-3 quarters, I mean, things, I won't say it has slowed down, but it has it is not up to that pace. So do you have certain monetization timelines in mind, and accordingly you will look to add projects after a certain point in time, or that is in continuous evaluation process? That was my question.
So how we do it is a continuous evaluation process. Sometimes, I mean, we are working in various stages of the land deals themselves, and only when we have, put down some funds, that is when we formally include it into our land bank. But that doesn't mean there aren't discussions that are going on at various levels of seriousness. And also, once it enters the land bank, it could take, some amount of time from when we have, when it gets through the design and approval phase. Sometimes it can be as quick as 3 quarters itself when it goes from into the land bank and into the launch pipeline, which is why it's difficult to really sort of pinpoint exactly when the duration could be and, the movement quarter on quarter. But I think overall as an approach, we're aggressively looking for land. There's no pullback on that side at all.
Sure. That's very helpful. Can you share the latest completion timeline for Twin Towers? And I think last quarter we also discussed about Brigade Padmini, kind of commercial project, which is not there in the updated pipeline this quarter. So just a status on that as well.
So Twin Towers is going well. It's under construction and most of the civil work is done now. Just the facade, etc. is being completed. We should be completing the project by March 2024. In terms of Padmini, it's a 1.3 million square feet project. We're going to be doing that in phases. The first building is already up. Should be ready for completion in the next 2 to 3 months.
So it's showing in the project to launch. Padmini is there in the investor presentation.
Oh, okay. Got it. And just lastly on collections breakup that you provide every quarter, your breakup of collections between residential, commercial, etc.
You want for the quarter?
For the quarter, yes.
Residential is 983 crores. Commercial sale is 48 crores. Commercial lease is 161 crores. Retail is 53 crores. Hospitality is 145 crores. And maintenance services is around 74 crores. Total is 1464 crores.
Sure. That's helpful. Thank you. All the best.
Thank you.
Thank you. Next question comes from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi, good afternoon, and congratulations for a great set of numbers. So couple of questions to Pavitra. First is, you mentioned that demand environment remains strong. What is the kind of price movements that we have seen in our projects that's on a like-to-like basis in FY23? And second would be, what would be the status of approvals on the TVS project, considering you said it could contribute almost a quarter of our sales in FY24. Thank you.
Yes, so on the pricing that we have seen in the projects, across the board, we've seen about a 7% increase in the realization. And that is, excluding the plotted development, we've seen that kind of pricing increase. Because this year we had million square feet of sales in the plotted development segment. In terms of TVS land, as I mentioned, we are aiming for a launch towards the end of this financial year, which means the timeline of approvals and everything we're working on is in line with that. So we see those things going on track.
Sure. And a couple of questions, data queries for Atul sir. What would have been the rentals for WTC and BTG this quarter?
So right now, I don't have a quarter number, but full year I can say quarter 4 is around BTPL, that is Tech Garden is 40 crores, and PREPL is around, which is Chennai, 36 crores.
And lastly, what would be our pending land-related payments that we need to make?
That is around 700 crores or so.
Okay.
Yeah, around 700 crores.
Sure. Great. That's it from my side, and all the best for future.
Thank you.
Thank you. Next question comes from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hello. Hello.
Hi, good evening.
Yeah, hi, Tal. Yeah, hi, good evening. So my first question is on total land bank addition or gross development value addition for the full year FY23. So can you please highlight that number?
Yeah. So in the total additions during FY23 was 5,000 crores in terms of gross development value.
Okay. In terms of million square feet?
So total project area would be 8.68 million square feet.
Okay. Well, second question is on the commercial business. So the area which is yet to be leased. So what kind of inquiry or the pipeline we have, and with what and timelines to basically achieve this entire leasing for the residual area?
Yeah. So there is healthy traction. So I'm not getting too discouraged about it, but there is healthy traction. If one of the large inquiries happen and the whole area gets taken, if those two inquiries don't work out, then we have to start leasing it in a smaller piecemeal manner. The size of transactions has reduced slightly. So prior to this, average transactions in Whitefield used to be 100,000, 200,000. Now people, as I mentioned earlier, clients are trying to rationalize their space take up. So prior to COVID, if people or tenants would take a 1:1 ratio. So for instance, one desk for every employee. Now they're trying to rationalize a lot of their, so for instance, they might take one desk for every 2 employees, every 3 employees. So we are quite positive with the kind of traction there is. I'm hopeful that we can lease it in the next 2 to 3 quarters. And that's the plan. And the earlier the better. So we are pushing for it. The leasing has been decent for even this quarter. For instance, while we did 238,000 this quarter from our stake, we did another 283,000 for our investors and areas where we have sold. So there is decent amount of traction. It's just that the leasing that we did for the investors and for the owners is, like I said, another double of what we did for ourselves.
Okay. And during this quarter, this land payment of 480 crores, so is it largely pertaining to the TVS land or is it something else?
Yeah, mainly it is TVS land.
Okay. And just on this Twin Tower, so I think earlier we mentioned that by March 24 it will complete. So any pre-leasing momentum there, pre-lease inquiry, or any update you have on the leasing side of that?
Yeah, there are RFPs in the market, so we'll be applying for all of them and hope to see some traction there.
Okay. And just lastly on the residential piece, just on the demand side, so earlier we spoke that the interest rates have not really impacted us. So how are you seeing in this quarter the momentum on the demand side?
Yeah, I think based on the success, like I said, 60% of our numbers, the highest ever numbers in Q4 came from launches. So I think that shows the appetite of the customer for a product where it is not even complete, which means the market has sort of come back to its levels of interest where people really believed in the pre-launch story where at the time of launch, the best pricing, they also want the pick of inventory and then to, undertake that, pay three EMIs or whatever may be the case because they see the value in doing so by the time the project is delivered. So considering customers take home loans and are subject to the interest rate levels that there are today, I think it's a very healthy sign of demand in the market. So despite what news is there about the hiring situation or attrition or whatever it may be, I think we have not seen that translate to any drop in leads or even walk-ins. In fact, it seems to be a very strong market with huge appetite for launch.
I'll just add a number which has come from the analog report which you should see is that today if you see the investments of the individual or a station, 60% investment is going into real estate because they think it is a stable investment. 26% is in equity market, and rest is in FDs and gold. So I think real estate market is doing well, and if you see millennials are driving this market, and market should go. And the third point is that last 10 years, this quarter one has been the highest sales which people have seen in quarter four of any year. So I think signs are good, and we should continue to see that real estate sales do well, especially residential.
And on the hospitality, any update on monetization, any talks, any progress?
So there is, like I said, we're in discussions, but quite preliminary. But we'll keep you posted as and when there's something concrete to discuss.
Okay. Yeah, thank you. Thank you, team.
Sorry?
Thank you. A reminder to all the participants that you may press star and one to ask a question. A reminder to all the participants that you may press star and one to ask a question. Next question comes from the line of Biplab Debbarma for Antique Stock Broking. Please go ahead.
Thank you, sir, for taking my question. Sir, on the Brigade 3 towers, what would be the expected rental ballpark, just a ballpark, that you think would be achievable?
So we're expecting to be 75 and above.
Okay. And could you elaborate on Brigade Padmini? I think I had missed it. What is the total area? And I missed it, that part. And
1 million square feet. We'll be doing it in phases. One block will be ready by September, and that block is around 260,000 square feet.
260,000 square feet. And that is
and the other two blocks, sorry?
No, that's fine. Continue, ma'am.
Yeah, the other two blocks is block 2, which is around 736,000, and another block which is 350,000. Those two are under excavation now, so they'll come up in some time.
And what would be the expected rental here in the first block?
It will be around 65 to 70. The first we are targeting 65. Depending on when the other two blocks come, typically we estimate a 5% increase per annum, but it really depends on how much size take-up is there. If one client is taking the full building or there are multiple tenants, so you can say 65 plus.
Mr. Biplab, please go ahead.
No, that's all. Thank you.
Thank you. Ladies and gentlemen, we have reached the end of question and answer session. I would now like to hand the conference over to Ms. Pavitra Shankar, Managing Director, for closing comments.
Good afternoon. Thanks again for joining us today. Before we close, we'd like to just share a few other highlights from our group. We're proud of the work our foundation does through various education, health, community development, and welfare programs. Therefore, it's especially rewarding when the Brigade Foundation won an award at the Kradai Karnataka Care Awards 2023 for best CSR work done over the year. I'd also like to call out a unique initiative by Brigade in collaboration with the BBMP and a community organization known as the Ugly Indian. The Bengaluru Marga Darshana is a walkthrough map of major roads and junctions that shows how several major roads connect to the central business district of the city. It's for the public and for kids, and is definitely worth a visit. It's located under the flyover crossover after Hebbal Junction. The IME, or the Indian Music Experience Museum's Project Sarita, which is supported by Kotak Mahindra Investments, celebrated World Autism Awareness Day on April 2nd. The objective of organizing this program was to celebrate diversity and make the museum experience more empathetic and accessible for all. Project Sarita has reached 1,650 children who are from socially disadvantaged backgrounds and neurodivergent. World Trade Center, Bengaluru at Brigade Gateway is all set to host the 2024 edition of the World Trade Center's General Assembly. This will be the first time that the General Assembly is being conducted in South India. WTC Bangalore was voted as the host city for 2024 by the Board of Directors from among 7 other WTCs across the world. Delegates from over 200 global cities are expected to engage with industry captains from the state during a 6-day assembly next year. Our PropTech Accelerator Brigade REIT is now inviting applications for its 14th cohort. 47% of Brigade REIT startups have raised funds within 12 months of graduating. This year, we've also launched the go-to-market offering, which along with our syndicate fund, will look to onboard and help scale startups with the brightest ideas in the PropTech space. It gives me great pleasure to congratulate Amar Mysore, our Executive Director, for his new role as President of CREDAI Bangalore for the next 2 years. We wish him the very best for a successful term. And that's a wrap for our earnings call. We're proud of everything we achieved last year and look ahead to FY24 with renewed focus. Thank you, everyone.
Thank you. On behalf of Brigade Enterprises Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line.